Sudhir, please start.
Yeah, okay. So Inas, you can start now. Yeah. Welcome to Policy Hacks. Policy Hacks is an initiative of iSpirit. iSpirit is a think tank formed by leading practitioners to build a healthy, globally competitive and sustainable software product industry in India. This is the second topic that we'll be covering today under Policy Hack. So, generally, Policy Hack is about demystifying the policy issues. So we have some blogs already online under the policy hacks. Some new announcements that has been made recently is what we are covering now one by one under policy hacks. So this particular policy hack session is about what we popularly call as angel investment, or it's also called as came to be called in between a startup tax. And so it's more about fair market value assessment by the income tax on the investments done in the startups. So Sanjay Khan, who is the expert who has drawn the Stay in India checklist on behalf of iScript, will be speaking to you. Sanjay Khan is a lawyer by profession and a senior associate at Khetan and Company. So over to you, Sanjay.
Yeah, thank you, Sudhir. So like Sudhir said, angel tax, as it is popularly called, was discussed a lot in recent times on, particularly with respect to down round valuations of a lot of startups. So to summarize the issue for discussion, uh, under the Indian Income Tax Act, if a company receives money for its shares, which money is in excess of the fair market valuation of those shares, then the excess money that the company receives is considered to be income in the hands of the company and therefore taxed as such. So suppose the valuation of the company is 100 rupees per share, and the company issues shares to a person at 150 rupees per share. So the difference between the fair market value, which is 100, and the actual money received by the company per share, which is 150, the delta being rupees 50, will be considered to be income in the hands of the company, and the company will need to pay tax on it. Now, this has been a bit problematic for a lot of investors in the past, and essentially, this provision was introduced a few years back in the Income Tax Act to prohibit all the structures wherein money was utilized. This channel was used, in fact, to convert black money into white money in some form or the other. And therefore, to put a restriction on such structures, this provision was introduced in the first place. When investors raised concerns that they are hit by this provision because invariably they may pay a value to the company which the assessing officer need not agree as the fair market value, and this leads to a few issues. The pursuant to these requests, the government relaxed the requirement for money which has come from foreign company and SEBI registered funds. Therefore, what happened finally was that SEBI registered funds, which is a lot of venture capital funds in India who make investments in startups, and foreign companies, which is the other class of investors which invest money in Indian startups, were exempt from this requirement. And the only persons who were hit by this were angels who were investing domestic money in India, which is why the term angel tax came to be. There have been various discussions with the government and various angel networks. However, no viable solution was found, and therefore this issue formed part of one of the 34 key issues in our Stay in India checklist. And we interacted with the government, DIPP, the Ministry of Finance, and the tax department on it. And finally, a resolution somewhat palatable to the industry has come about, wherein this angel tax has been done away with for all startups uh, going forward. Now, there are two concerns here. Uh, how do you recognize what a startup is? For that, there is a separate notification of DIPP which requires these startups to go to the Startup India portal and register themselves. Plus, since this is a tax incentive, to avail of this tax incentive, they need to be approved by an empowered interministerial board. So essentially, there is a two-step process that a startup will need to take in order to take advantage of this exemption in relation to the angel taxation. First, they need to go to the Startup India portal and register. And second, after registration, their application will be forwarded to an interministerial board, which will sit and deliberate upon whether the startup in question deserves tax exemptions or not. In the event they think the startup deserves the exemptions, they will approve it, and then this startup tax or angel tax will not be so much of an issue for such a startup. As one can see, this leads to an issue of delays, issue of bureaucratic hurdles, because nobody knows how much time will it take for a startup to get recognized from by the interministerial board. And since the process is so cumbersome and there are a lot of documents that one needs to submit, it is not very clear as to how many companies in actuality will end up getting this benefit. Uh, Therefore, as a
So Sanjay, to
conclusion,
ask you, so Sanjay, to
yeah,
ask you a question. So anybody who is prepared to apply to the startup policy and get a startup recognition tag, and then he also applies for a tax benefit the, under the startup policy, is eligible for getting investment from angels. Is that the fair explanation?
that is correct. So companies are eligible even today. However, this provision of the Income Tax Act is applicable to those companies which receive money or investment at a valuation above the fair market value, which is why this entire, and who determines fair market value? It is the assessing officer who can take a call that the fair market value is 100 and not what you are claiming, which is 150. Therefore, there was a lot of discretion given to assessing officers, which created procedural hassles, and a lot of companies were irritated by the fact that they were receiving notices and they had to undergo a lot of compliance before they could establish that their investment was at fair market value. So this was becoming a bit of an issue. Now, at least, if companies which register at the Startup India portal and which are approved by the interministerial board for being eligible for tax benefits, those companies will not need to worry about this particular aspect, and they can freely take money, and whether it is at fair market value, below fair market value, or above fair market value, subject to other requirements. So yeah, this one registration and approval from interministerial board will solve this issue forever for these startups. And by forever, I
So,
mean till the time they are startups, which cannot be more than 5 years. Yeah,
okay, so good. So it's basically flexibility to startups,
that is correct. Yeah,
and so they can avail a lot of money from the
sure.
investor market. So thank you, Sanjay, for this
Thank you.
explanation on the angel tax part. Uh, for the benefit of listeners, there are already some blogs on the startup tax on under the policy hacks on the iSquid website, and further we'll be adding connecting blocks on this topic, and there are other topics that we'll be taking for your
Sure.
benefit. Thank you, Sanjay.
Thank you. Thank you.
Thank you.